Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 41 of the Forex market review. Let's jump to the charts to see what's happening. So today we're going to look at two pairs. We're going to look at the Euro Aussie and then we're also going to look at the USD Yen. Starting on the Euro Aussie, the reason why I've chose this chart is because what we can see on a weekly time frame, so currently on a weekly chart, we can see this stepping down process. But every time it steps down, it seems to find support around this level here, which seems to be about the 14400 level. So what we want to do is firstly drop in an indicator roughly around the 14400 level, and just to keep an eye there, that way we know where the market may pull back and find additional support. And once we know that, we then grab another horizontal, or you can use a downtrending indicator, and we just go ahead and we'll just grab the highs pretty much of all the current candles. So obviously there's a few points in there, so we're just going to grab those highs and just draw this downsending line just to see this triangle formation. So what's this saying to us on the higher time frame is that it's very likely the price is going to bounce roughly within here, but then one day it's either going to break down solidly or break up, and we want to be ready for a position roughly in that area. Dropping down to the daily time frame, we can see again the stepping down motion of the Euro Aussie, and then we just look at that chart and say, well, at the moment it's sitting below the 200 EMA. So if we get a couple candles hovering above this daily 200 EMA line, and so sitting above here a couple candles, then we probably could expect that it's going to be breaking up. How high would it go? Well, initially I wouldn't want to trade it much further than this point around here because of this downtrending motion of this currency pair. How long will this be in this downtrending market? Don't know, but again, if it comes down, retests this area around here, there's a good probability it may bounce off there again. So having an entry somewhere down these levels could be a good risk to reward. Dropping down to a 4-hour chart, we can see on the DSR indicator here that it's bouncing in here and it's starting to find some support here. Currently again sitting below the 200 EMA line. So really need to see it close a few 4-hour candles above this line, and then it's possibly going to push back higher. On the 1-hour chart, we're starting to see some divergence. We're starting to see a lower low in price and a higher AO. So to me, that's a good sign that it's very likely we could be seeing another push back higher. Reason why this new low has formed recently is because of the Aussie consumer confidence numbers, which came out about an hour ago. So that number was better than expected. So obviously the Aussie dollar has strengthened, which has seen the euro weaken against the Aussie dollar. So we want to know why the market's falling, and that's why we use news to understand that. How far will it fall? Well, again, because this daily DSR zone is here, I think it could find some support initially around here. So for me, you could be looking at an entry somewhere around these levels, maybe using an 80 pip stop loss and trying to ride back up these tops. And so you're looking at risking 80 to make 160. That's a 1 to 2 risk to reward, which is always a good thing to look forward to. Where can it go? Well, on this 4-hour chart, if we use our Fibonacci expansion tool, so we go from the lows to the highs and then back down to the current lows. So obviously if this keeps falling, we want to keep pulling back down. But the Fibonacci 100% level is sitting around this DSR zone here. So therefore, if you wanted to get in at these levels and you're looking at an 80 pip stop loss, getting out at these DSR zones of 280, so that's a definitely 1 to 3 risk reward. So yeah, you can either try to just go to the most recent highs, which will be the first place of find resistance, and go for 1 for 2, or try to push it a bit further and go for 1 for 3. Just follow your trading plan and stick to it. because this is how a successful trader trades. They do not modify their rules. They are prepared for losses, but overall they know in the long run they'll win more than they lose. And that's why our risk to reward has to be ideal for each trade. So for myself, I'm currently expecting it to push higher. So I'm hoping to see it push up to these levels here and maybe even up to these levels here. And I'm personally looking at taking this trade myself. But you need to follow your own trading plans, and just remember that the advice I give you is general advice only, and you need to seek your own professional advice and do not rely on what I do. Follow your own trading plan and what you have come up and what you've back tested. The second trade we want to look at is the USD Yen. Here we have 1 up for 2, down for 3. So I've mentioned this a couple of times now, the wave cycles. So I'll just go and draw them in for you, just so you can see roughly where we're looking if you're new to my videos. And you can understand waves, then you've got a good probability of understanding where the market goes, because the market loves to travel in wave cycles. So what we have is we have a pull down for 1, push back higher for 2. Now 2 can't break the highs of 1, generally comes back to 61.8. We have down for 3. We know this is 3 because we look for the first largest AO. And on the downside, we've seen a couple up the butt. Then down the downside, this is the first largest AO. We'll then grab a Fibonacci Retracement tool this time, from the highs to the lows, and we're looking for a pullback, generally to a minimum of 38.2. However, this weekly 200 EMA line will form some type of resistance area. So if it pushes up into here, it could find resistance and want to push back lower. So dropping down to the daily time frame, well, just before we do that, we don't know this wave 3's ended until it comes back up above this 0 line here. So once we see it close back above there, then we know the bottom of 3 has ended, and this possible pushback higher for 4 has begun or could be ending itself. But that's where we use the Fibonacci retracement of 38.2. On the daily time frame, we can see it's stepping down and starting to find some support at this daily DSR zone. It's pushed back up, found some resistance, so it could push back lower. So if one of your trading plans was to hit resistance, come back, retest support again, and then you got in, you could look at putting a 200 pip stop loss and getting out here for 1 to 1.5 risk to reward. Or when it came back to 38.2, you could be looking at risking 1 to making 1 to 3 to almost 1 to 4 times. So definitely if you got in around these levels and stop loss down below here, if it came up to here, if you didn't get out, definitely bring your stop losses to break even, and hopefully it pushes back up here, and that meets the wave 4 pullback rule on that weekly chart. On a daily time frame, we can see what appears to be a large AO here. So this could be 1, 2, up for 3. So again, I'll just go draw those in. What I'll do is I'll actually zoom in a little bit for you so you can see this a little bit more clearly. Now, identifying waves 1 and 2 are always the hardest, but we identify those after we know where wave 3 is. So here's 1, that's the bottom down here is 1, pushes up, we then hit 2, then pulls back is 2. 2 can't come below the wave 1 beginning, which it hasn't, and it's pulled back a bit over 61.8%, which is the minimum requirement. We then have our wave 3 push back higher. We know this is wave 3 because it's the first large AO to the upside. And then we have our wave 4 back lower. So until this AO comes back to 0 line, which has probably got a few days to go, we don't know this is the end yet. And it quite possibly could be. For me, I think it's going to do an A, B, C cycle. It's going to come down, probably retest this 4-hour 200 EMA line. using our Fibonacci Retracement tool, we go from the start of wave 3 to the end. You follow it back to the beginning, and roughly around this point area is 3. So 1, 2, 3. It's got to come back to the minimum of 38.2, which it should. Hopefully it comes back close to the 50% mark. Then you'd be looking at an entry around about these levels here. Stop losses somewhere down at these levels down here, because wave 4 come into wave 1 territory. So you could be looking around 150 pips, and you want to get out up at these DSR zones up here. So let me just zoom that in. So if you were to get in around here, put stop losses around 150 to 200 pips, even 250 if you want to keep it right out of the market. Up here, you've got a resistance at around 450 pips. So for me, if I got in that price, I'd be looking at getting out around before this DSR zone. So I could say I could probably make 400 pips. So the most stop loss I would do would be 200. So I probably wouldn't do more than a 200 pip stop loss for my 400 pip profit, 1 to 2 risk to reward. If I couldn't make what I wanted, then obviously I need to wait till it pulls back even further. Just because we believe it will come to this level doesn't mean it won't come down to this level here. It just can't come into wave 1 territory, which is all the way down here. So just keep that on board and make sure you always follow risk to reward, and don't just jump into a trade. I'm going to get in here, and they're trying to get out there, and you're going, oh, that's 300 pips. I could make 300, but I need a 300 pip stop loss. Well, that's no good. You know, no point in risking $100 to make $100. That means you've got to get more than 50% right. But if you wait till it comes down to these levels and you risk $100 to make $200, you only have to get it 40% right, and you're still making money. That's your risk to reward. So thanks for that. That was week 41 of the Forex market review. Forgot to mention that on the USD Yen, that the USD is currently falling, and that's because the Yen manufacturing numbers were better than expected. So the factory numbers, so because those numbers were better than expected, that's the reason why. So we'll just jump to the Forex economic calendar, and this is where the numbers come out. Consumer confidence numbers, expecting 0.3, and they got 1.1, better than expected. And sorry, it was machine orders numbers. Expecting forecast, sorry, was 7.9, and it came in at 11.6, so better than expected. So blue generally means better than expected, and red is worse than expected. So when the numbers are better, that's why we see that pair move. So if you're wondering why the USD Yen is falling, it's because the Yen had positive news. Why is the Euro Aussie falling? Because the Aussie had positive news. So those pairs were going opposite, because the Euro is weakening as the Aussie strengthens, and the US dollar weakens as the Yen is strengthening. So keep an eye on that. Follow the news. Keep an eye on the economic calendar, and just stick to your trading plan and your risk to reward, and you will do good. Just back test and stick to your plan. Here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.